Yesterday was an important day in the markets, and I'll show you exactly what I'm talking about in this video. We're going to take a look at SPY, QQQ, IWM, and we're going to talk about each of them and the technical details that we have that could indicate that we could be at least at a temporary bottom from where we're at right now. We do have to watch out for the economic indicators that come out, especially non-farm payrolls and the unemployment numbers that we get on Friday. And I believe that Jerome Powell also speaks maybe at 1:30 p.m. on Friday. We have to watch out for that as well to see what exactly we get. And I want you to keep in mind the four pillars that I've talked about for the market bullishness to be there. One is GDP strength and that recent weakness that we saw kicking out that one pillar. You saw what happened to the market. So when you watch the tumble, just keep that in mind. We also have the Trump tariffs out there being rather inflationary pressures. So watching what we see from the inflation reports is also going to be huge for us. And then we want to watch for easy monetary policy, which with inflation, we're not quite there yet. And then, of course, the last of those four pillars is a stable labor market. And, well, like I said, for Friday, non-farm payrolls and unemployment, especially with all the government cuts that we've been seeing, or maybe even just a stall in government hiring. If that tends to be the case as we watch for those non-farm payrolls to come out, the government's been a big one that's held it up for a while. And so, well, we'll watch and see what we get coming in at about 4% unemployment. It's going to be great for us. Watching the numbers that we get for non-farm payrolls going back up over the 200,000 mark would be great for us. Right now, I think it's expected to be about 160. So with all that context in mind, over to the markets here. What are the technical indicators that we see? Well, guys, we nearly in SPY nearly came down to that 200-day, and we also did that on some pretty darn high volume. And so when you have a big movement like this and you watch that volume increase and then you get an igniting volume towards either a peak when you're moving up or a trough when you're moving down, that can signal that you are going to see some sort of reversal take place. Now, it doesn't necessarily have to be a complete reversal, but it is decent evidence. So yesterday I took out with SQQQ just because it is nice to hedge my bets with that, a put, which is actually going long on the Qs, NASDAQ 100. We'll talk about that in a moment. And so for that one, with some relatively low risk, I should be able to profit pretty decently off of that if we get a good sign here. Now, I know that this is SPY, but I don't necessarily find the same liquidity with some of those smaller options that are out there with it. In any case, getting down near the 200, that's a good spot for a bounce. And we actually saw some recovery from that and going into the close for SPY and then trading up in the pre-market this morning. And then, so we got momentum also being down where it is, down around 33. For SPY, we don't tend to stay down on momentum for very long in these bull trends. So if I stretch this out here, you can see we go back to the August 5th carry trade. Then that was about 30.71, so we almost got to oversold, and then we roared back with that. And that's not just a one-off either. So if we go back to April 19th, where we tend to find that we were down near 30 again, 31 this time, that we had a large movement upward from that. Here, let me bring that down just a little bit, and we'll bring this down just a little bit, so that way you can see a little bit more of the chart that we have here. And then if we go to some of those bigger sell-offs that we had, such as October, end of October for the 23rd, after a pretty extended sell that we had there, that you can see that once again, we start to have a big move upward that lasted for a while. Go bull market, right? So October 3rd also came down and it actually touched down below 30 as well, just like we saw for that later date in October as we go back through time here. And then we had that recovery come in. And if we keep going backwards and look for other times that we either got down below 30 or near 30, every time has been pretty in the near term followed by that increase, if you will, especially after that volume spike took place. So here on the 30th of September in 2022, we were down, even though we were oversold back here, we didn't have the same volume support as what we got on September the 30th. So we could keep on going back through history, but it is a repeated pattern that we have that back tests fairly well for SPY, that as that momentum indicator gets down near 30, for the S&P 500 ETF that we see here, that there usually is some at least short-term rally that follows, potentially long-term rally that follows it. And I went through the four pillars that I think it's going to take to return strength to the markets. And so we have to watch those over time and see how they're maintained, if they're strengthening, if they're weakening, or if they get knocked out. Those are the things that we want to watch for that help determine a longer-term movement for the markets. So moving over to QQQ, we actually came down and actually pierced below the 200-day, and I only wish that I was able to watch the market when that happened, because getting down below at any point in time is where I would have entered that long trade, that long swing trade back upward on this, even if with a near-term fairly aggressive option like I took with SQQQ put which is inverse, 3x inverse approximately to what we have for the Qs. It might burn me, but I do think it is going to pay off. First of all, bouncing off that 200-day, also with the same pattern that we see with the momentum indicator with the RSI getting down near 30s, usually followed by a fairly significant recovery, and the volume climax that we see taking place yesterday, even exceeding what we had going back to Monday, the 27th of January, even before that, the Friday, December the 20th, which was an options closing day, if you will. Now, there are some concerns that we see coming off this double top, if you will, followed by the drop that we had, the 50 and the 20-day. The 20-day closing down on the 50-day, going negatively sloped. Not always great for us for what could be coming in the longer term for this. Mind you, we also hit almost 10%, 9.81% correction from peak to trough on this before experiencing that recovery. We'll see what the market gives us today. Like I said, Friday will be another day, a new day for watching non-farm payrolls, watching unemployment, and we want to pay attention to these near-term movements that we see. If you're a long-term investor, well, then I guess you know that this is just something most likely temporary, just a little bit of minutia, a little bit of a hiccup along the way, unless, of course, you're somebody who happens to be in margin, in which case then you have to be very concerned for that margin call that could always come your way if you're too much into margin and there's enough of a sell-off, and that's something that puts you into a margin call situation. If you're not sure what a margin call is, you should probably check it out. And just be careful with those margin accounts that are out there. Now, mind you, none of this is financial advice. This is all educational information that's put out there, just things for you to mull over, consider, research about, read about. And also, as you look at these charts, see if you're seeing the same things that I am, or if you're seeing a different story play out. And we'll wrap things up with IWM here. When we look at IWM, we had a double top. We've sold off that double top somewhat. We're looking at the weekly chart, by the way. We are down near the 200 week on this, which could be a spot for a bounce for us. We want to be watchful for that. And if we go down to the daily chart, what we see on this is, once again, during that sell, that brought us all the way down here. Let me make these bars a little bit wider for your viewing pleasure. Having these long wicks, top and bottom, and that narrow body on this candle right here shows that battle-tested candle between the bulls and the bears, and it could be a shift in power coming when you see a candle like that. Check out the volume confirmation. We're in the oversold territory for IWM, and we also have this broadening, if you will. I don't have the trend lines on here right now, but across the bottoms, across the tops, that broadening that you have could also be signs that you're going to be bouncing off that bottom trend line and recovering, potentially reversing. Now, Russell 2000 is going to be more sensitive to those four pillars than what we're going to have for SPY and QQQ. And so you're going to have outperformance in either direction. So if as those pillars get knocked out, expect the Russell 2000 stocks tracked by IWM to take it the roughest, to get knocked down, pushed down the most. And also on the outperformance side, to the upside of things, to the bullish side of things, as those pillars strengthen is where you get the most drastic recovery, most likely for those Russell 2000 stocks. So low inflation, easy monetary policy, strong labor market, and then high GDP. All of those things I think are going to bring back a pretty wild recovery. They're probably also most sensitive to those tariffs that are out there as well. If I had to take a guess. So we want to be on a watch out for IWM, for those moments, for those indicators that strength is coming back to it. Beyond the technical indicators that you might have, like I said, with this narrow body candle, high wicks that you have here, the broadening of the candles across the tops and the bottoms, we could be seeing a temporary bottom at the very least on here, and maybe we actually come back up and retest that 200-day. We do have to be watchful for the 50 coming down, the 20 coming down, for a potential death cross that could be coming our way. But like I said, this volume climax that we have, and then also what we see for this indecisive candle, usually the next candle that follows, especially on a high volume day, could be that thing that sets the next direction that we're watching for. And we see that across all three of the ETFs, whether it's SPY, QQQ, or IWM. So guys, I have become in partnership with StockMo over at the Discord, which the new link is down in the description for that Discord, where I'm one of the panel experts run by StockMo for that Discord. You guys can head on over there. You can see all the different buys and sells across the StockMo, the panel experts that are over there. We have a vibrant community, thousands of members that are part of it. There's the bread bot that's over there. There's also AI trading strategies that are also available over there as well. There's advanced charting available, and there's just so much there, including the wins channel. We can go and see posted by the different members of that channel, the different experts. You can see stock moment stuff. You can see all those trades being posted over there as well, that you can go and see what's there to be celebrated for that. And also down in the description, you'll find a link for Stockmo Academy, where you can get access to the courses for technical analysis and technical analysis trading, where it talks to you specifically about the bread recipe and how to trade using that bread recipe, and then also the options course, which is just a next level in terms of coursework. I have my doctorate in education. I've been in education for 17 years, and I can tell you, like, it is just probably the most solid and well put together course that I've ever seen. When you sign up those courses, make sure that you use the code word DOCTOR, D-O-C-T-O-R. That's going to give you a massive discount on those courses, guys. Thank you very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.